In a world where financial markets can change rapidly, investors are constantly searching for stability. Over the past few years, markets have experienced significant volatility driven by inflation, interest rate changes, and global economic uncertainty. While many investors focus on stocks and high-growth opportunities, another asset class is quietly gaining attention again. Bonds. Many experts, bonds are starting to look like one of the safest investment options available right now. To understand why bonds are attracting renewed interest, it's important to know what bonds actually are. A bond is essentially a loan made by an investor to a government or corporation. In return, the issuer promises to pay interest over a set period and repay the original amount at maturity. This predictable income structure is one reason bonds have long been considered a more stable investment compared to stocks. One major reason bonds are becoming more attractive is the rise in interest rates over the past few years. When interest rates increase, newly issued bonds typically offer higher yields to investors. Higher yields mean investors can earn more income simply by holding bonds. This makes them a compelling option for those seeking steady returns without taking on excessive risk. In the United States, interest rate decisions are heavily influenced by the policies of the Federal Reserve. As the central bank works to control inflation and stabilize the economy, its policies directly impact bond yields and borrowing costs across the financial system. When the Federal Reserve raises interest rates, yields on government bonds often increase, making them more attractive to investors. Government bonds, in particular, are widely considered among the safest investments in the world. For example, U.S. Treasury bonds are backed by the full faith and credit of the United States government. Because of this guarantee, many investors view them as a reliable store of value. This is especially true during times of market uncertainty or economic slowdown. Another reason bonds are gaining attention is the growing concern about stock market valuations. After years of strong growth in technology and other sectors, some investors worry that certain parts of the stock market may be overvalued. In such environments, bonds can provide a defensive alternative. Bonds also play a crucial role in portfolio diversification. Financial advisors often recommend a mix of stocks and bonds because these assets tend to respond differently to economic conditions. When stock markets decline, bonds often remain stable or even increase in value as investors move money into safer assets. Economic uncertainty is another factor driving interest in bonds right now. Concerns about inflation, potential recessions, and geopolitical tensions have made some investors more cautious. During uncertain periods, bonds are often seen as a safe haven where investors can park their money while waiting for clearer market conditions. Their ability to provide steady income, reduce portfolio volatility, and offer relative safety makes them a cornerstone of long-term financial planning.